All right, good morning, everyone. Happy Monday, January 6th. Quick sound check. Hey, good morning, Mirza. Good morning, Lorna. I am a happy Denver Broncos fan today. First time back to the playoffs since 2015. My wife was my girlfriend back in 2015. But all right, y'all, big week ahead. Do keep in mind the market will be closed on Thursday due to the passing of Jimmy Carter. But looking at the rankings on the sheet here, it's a market where bigger picture, I think we're still bullish. So you go looking at your monthly charts, you go looking at your weekly charts. Bigger picture, everything remains really bullish. Shorter term, it leaves it a little more neutral. Meaning you look at your 30-minute time frames, 1 hour, 15-minute. In some cases, in some spots, they all look a little rough. So looking up here at the market strength, total market, we're only at 23% of max strength. So not the kind of market where I think you wake up and you blindfold yourself and you buy calls. But it's also very far from a market where I think you wake up and buy puts everywhere. So a little bit neutral. And then indexes get a 15% of max strength. So kind of the same thing. And then the Big 10, which of course is TSM, NVIDIA, all of these guys, we are at about 48% of max strength. And then the sectors are at 12%. So again, none of that is bearish. It all slightly leans bullish, but not in the fashion where I think everything's fully locked and loaded, fully aligned for a push higher, just firing on all cylinders. So a little patience is required. And then for the futures here, they're trying to get a decent pop going. We got the NQ up about 1%. We got the S&P futures up about 0.8. Now for the cash markets, here's a couple of really important levels. When things become a little more neutral in the short term, it's really a matter of who wants it more. And for the swing traders in the room, when you've got a QQQ below the 50 or below that 21 EMA and above the 50, you're kind of caught in a moving average sandwich. It's not great for swing trading. Right? They'll flush it, they'll pop it. We're getting a lot of back and forth noise. You're not getting that bigger, sustainable multi-day move. To get that for the bulls, I think we're looking at QQQ 520-ish. Good rule of thumb we talked about in my room over the weekend. If the bulls can get 2, maybe 3 closes back above that 21 EMA, doesn't guarantee we're pushing back towards the highs, but it gives them a chance to, rebuild the 15-minute, try to get a 15-minute buy signal, try to get a 30-minute, try to get an hourly. The more lower time frame buy signals they can get above that 21 EMA, the more the odds favor a push towards the upside. Vice versa, the bears go breaking below 510, and we got nothing but a bunch of sell signals, then I think you're shaping up for a flush down to 500. Looking like at the moment, we're going to get the QQQ back into 524-ish. So I don't think that changes, all the problems in the short term, but definitely a step in the right direction. And then for the S&Ps, I'm watching 59.50, 59.75-ish. And to be fair, beyond that, we eventually got to get back above 6,000. But same rule of thumb. Couple closes back above the 21. They go get in 15-minute, 30-minute hourly buy signals. Then they're in a better spot to try to push it. So if we jump to the futures here, a little bit of that action trying to come through. S&P futures back through 6,000, back through that 21. Proudly wearing a 1 hour, 30-minute, 15-minute buy signal. And then the futures on the Q-tips, also back through their 21. More importantly, in a daily squeeze. So squeeze basics. Above that 21 with a lot of buy signals, you try to call for the push higher. Weekly chart keeps a buy signal. The hourly, the 30, and the 15 have got one. So it's a good effort here so far. And then going back to the sheet, for conversation's sake, let's just say S&P's QQQ. They're back above their daily mean. They're getting buy signals. They're trying to work on a path higher. what are a few things I'm trying to buy? Or a better question, what are a few things I'm probably not going to buy? Knowing that, yeah, if a week, 2, 3, 4 weeks down the road, we got the whole market back at a brand new all-time high, should be pretty good for everything. But things I would try to avoid, materials, negative 87 out of 120. Consumer staples, healthcare, biotech, real estate, industrials, energy, silver, transports, utilities. Could all change today, of course, but at the moment, we want to be looking at the semiconductors, Bitcoin, Big Ten. It may be a little Kathy Wood with the ARK ETF. For now, those things grade out a lot better. So if we do get a big push in the market, my thinking would be they should kind of lead the way there. And then within my top 10, right, Microsoft's got a negative 18. Netflix drops to a 12. Pretty good flush in Apple last week. That drops to a 19. I've got to focus on TSM with a 120, Nvidia with a 102. Google pretty good, Amazon pretty good. So plenty to work from. And we'll go through a few of them here. Right now in the room, we have, what do we have exactly? I've got a few different things here. But in the room on TSM, we have the February 21st, 210, 220 call debit spread. And we're taking that trade, trying to play the 3-day and the 2-day squeeze. Now, we also have a daily squeeze here, so one could argue a little bit better. But for those of you in the room who took that trade, I think we take the paycheck at the open here. They're going to gap the bad boy into about 218, 219. And for the most part, when we bought that trade, I want to say on December 14th it was. When we're buying it back here, that was pretty much the target. Get long near that 21 in the A+ squeeze. Wait for a breakout, wait for a push, trying to call for 220, 225-ish. And I also think, with earnings being next Wednesday, I believe, with earnings being next Thursday, hey, maybe they take it into 230, 240. But I think before the announcement, before the catalyst, catching the push into the target is a good deal on my end. So now we got to make sure they can hold the gap here for another 30, 35 minutes. One thing we could do, though, we'll talk about it. One thing we could do is, conversation's sake, they gap it up. That trade makes you $1,000 of profit. Easy math. Maybe you take $100 of that profit. You turn around and you buy, a lottery ticket, 250 call for earnings. And then from there, what's the worst case scenario? TSM does not get the 250 after earnings. You lose your $100, and between the two, it is a $900 net profit. Ugly 9. But that'd be the key. If you want to leave a couple chips on the table or open a new trade for earnings, think you got to do that in a fashion where if it falls apart afterwards, not giving back the profit from the easy part of that push. So we'll talk about that one, and then jumping over to Nvidia, who's quickly trying to come back to life here. Big close back on Friday through 140. One failed, 2, 3, 4, 5. They rejected there a good 5, 6, 7 times. Nice move on Friday. And now the gap up towards that 150-ish, which, as we all know, that is the level to break for Nvidia. And then notice the blue arrow down here on the squeeze. That is that's our slingshot signal. And that pretty much implies if they can get the MACD back above 0, looking up here, we have a good trend. We have good structure, but we're lacking momentum. So in the context of a squeeze with good trend and good structure, if they can turn that momentum line, get some gas in the tank, I think it all shapes up for a push towards 160, 165-ish. Could be a little bit like you had back here and back here. In an uptrend, pull back to one, printing a brand new squeeze, kick up that momentum, and you're getting that good stuff. Now, all that being said, gapping towards 148-ish. If you are going to buy it under $1.50, just acknowledge the fact that $1.50 is a pretty big level. So, I don't think it'd be too bad if they pop it towards 150. Little rejection, pulls back a couple of bucks, then they eventually get that breakout. Decent amount of squeezes here too. The 3-day squeeze, a 2-day, a daily, 15 and the 5. Now, beyond NVIDIA itself, a breakout through 150, a path into 160 should do wonders for the SMH. Which I still think into Q1 here. If there's a group in the market trying to set up for a really big move, I think it's got to be the SMH. Weekly squeeze, a 3-day squeeze, a 2-day, and a daily squeeze. So translation is it's a crap load of energy getting built up across bigger time frames. And if we just try to, visually fast forward down the road, and they do fire long, they do take out the highs, I think that gets the SMH into 300 and change. Which in a nutshell means what? That means your Broadcoms, your NVIDIAs, TSMs, LRCXs, they should all have some good wind at their back. I don't think we're getting that move, without NVIDIA. So if NVIDIA pops into 150 and then dies, ain't gonna work. But definitely keep an eye on that. And we got our TSM for now. And then looking beyond the SMH to a couple of tech names. My top two right now would be Google and Amazon. So Google setting up right near that 21 EMA on the daily. And what I want to do from here is mark up that 21. All right, so we've got a line in the sand around 188, 187. Meaning, for the most part, Google drops below that level. I don't want to be long. Above that 21, I think we watch the 4-hour squeeze develop here. Might not be ready for the entry just yet. And looking at the labels, it's a little bit too much mix match. Meaning trend is bullish, structure is neutral, momentum is bearish. If we can get 3 green, then I think you jump in, call for a push. And then same scoop here for Amazon. Daily 21 around 221-ish. And also a brand new daily squeeze. Right, might not be today kind of thing, might take a couple of weeks. But if they could get that daily squeeze back to a point where it looks like it did back here, we're getting the white dot, we're getting the white arrow. Everything lines up. Perfect score of 15. Could make for another good leg to the upside. But if we drop to a 4-hour squeeze, for example, bull trend, neutral structure, bear momentum. Got to get better alignment. But we got TSM, we're watching Google, we're watching NVIDIA, watching Amazon. And then one that we did pick up last week, which is a little bit off of my beaten path. But a member in the room called it out, and it pretty much fit the bill perfectly. This OKLO. I've never heard of it before, but what I have heard of is an A plus 3-day squeeze with an A plus 2-day squeeze inside of it, with an A plus daily squeeze inside of it. I bought the shares here. So we're long from about 24.50 ish. I've got two different thoughts in mind here. One, most importantly, being that we bought it and caught a pretty quick push, we don't want to let that turn into a losing trade. So I'm moving my stop up to break even around 24.50. But as far as locking in the profit, there's one school of thought where we put our limit order around $30, 29.80, $30. They hit it, we take our profit, and we move on. What I like about having the equity, and granted, I don't buy shares all that often, maybe a few times per year. But what I like about buying the equity, same thing I like about buying the futures. It's all pretty straightforward. There's no time till expiration, no premium decay. A point is a point is a point. So part of me thinking, if they can take out the highs here around 28.50, maybe bump up our trailing stop to that 28.50. Okay. They get it in the 30 and change, bump up the trailing stop to 29. I'm just wondering on a cheaper name, um, taking out the all-time highs coming out of a 3-day squeeze could turn into a pretty interesting runner here. And if anything, the 3-day squeeze calls for a move into 33 to 34. So we shall chat more about that one at the open. But yeah, pretty good looking squeeze. And then the other name off the watch list, again off the beaten path, would be the 2-day squeeze here in Hood. Or big push off that, big push off the 21, walking it higher, and then then Hood gets a little tired. We're a little tuckered out in the Hood. All right, and you're chopping, you hold that 21, you maintain perfect trend, you maintain perfect structure. For now, they maintain momentum. Brand new squeeze prints. If they want to, it's a really good spot for continuation into a new high. Big push, little chop, build up the energy, kicking off into 47, 48-ish. So I don't have any Hood right now, and I'm not sure if I'm going to get any Hood, but I think it's a good looking chart. Figured I would throw it out there for you. But yeah, guys, for the most part, that's the watch list right now. I think A-Net has got a pretty good looking daily squeeze. Gap it into 118-ish. So you maybe don't chase it, but that looks pretty solid. How's GameStop doing? Still looks really good. It's just it's not in a big rush to do anything. And then the final one for you here would be Bitcoin. And I think you want to watch this brand new 2-day squeeze. It's actually a lot like Hood. Push off that 21, big leg to the upside, and then you're chopping, but you hold above your 21. Trend is bullish, structure is bullish, momentum is bullish. Now they're working that brand new squeeze. Now the key is you take that 2-day squeeze, you pop open the Hood. From the ground up, can they trigger enough buy signals to get that push going? They're doing a pretty good job, right? They got a 4-hour, they have a 2-hour, an hourly. It might not be an immediate thing, and it also may never happen. But yeah, keep an eye on that. There could be a path eventually back into 115,000 and change out of that bad boy. But all right, y'all, that is what I got for you on a fine Monday morning. One more quick peek here at the futures. S&P's pushing, and Q pushing, Bitcoin pushing. Nvidia trades around 148-ish. TSM trades around 219-ish. Very, very bad boy. OKLO trading around 28. So there's the spot to break. And then little gap up coming for Hood. Decent pop coming for A-net. I'd imagine a decent pop coming from most things out there. But all right, my friends, any questions, any chart requests? Drop them in the chat for me, and I'll get caught up for you. And a couple of housekeeping notes on the indicators. So this morning I sent over 3 files to Eric, the indicator wizard himself. So he's going to work on the brand new squeeze labels, which my advice is these should replace the current ones. Right? Trend, structure, momentum. That's everything that goes into our scoring system. No, so if you want to know if we got a squeeze, you look down here. I mean, everything else pretty self-explanatory. There's our little checklist for our scoring system. So if I want to look at a daily chart of Microsoft right now, okay, I can look at a -4 and I can take that and run with it. But why are we a -4? Trend's a little neutral, structure's neutral, momentum leans a little bearish. So there's the inner workings of a -4. So Eric's going to work on the update for that for Thinkorswim and TradingView. And then, whoops. And then the other update is for the A+ signals. You got the white dot for the A+ bull, white dot for the A+ bear. Now we have a dot for a perfect score of 15, plus 15 or -15. So an example of that would be a 15-minute on Netflix. And you could change a color to whatever tickles your fancy, but the blue dot just means you have a -15. Just about as ugly as she gets. Where we're a TSM on a daily chart. Well, we got a white dot because we have a squeeze. If you look at the 2-day time frame, right, blue dot, perfect score of 15. And what I wanted to show you was, take a chart of the QQQ, for example. We got to acknowledge how much easier trading gets when the QQQ is operating with a perfect daily score. That's December 2nd until December 17th. Whatever your bullish playbook might be, you like buying a breakout on a 5-minute, you like buying pullbacks to a 21 EMA on a 30-minute, you like trading squeezes. Whatever you do that requires a market moving higher, that whole game gets easier when things line up for a perfect score. We lose that blue dot, it's a giant chop fest. So yeah, that's we got that coming out for an update. We have the brand new squeeze labels, and then for the folks on TradingView, we're going to get you the upside and the downside targets, the green line and the red line. So yeah, Eric's going to do his thing, and then we'll keep y'all updated on that end. DC. So for OKLO, I've got 500 shares from about 34.50ish. Not 34.50ish, 24.50ish. It does have options. Excuse me. It does have options, and from what I saw, they look pretty good. With the spread, volume, all the above. But on a cheaper name outside my watch list, I don't mind buying the shares. I did that on GameStop a couple of weeks ago. Hey, good morning, Paul. How are you? RDDT Reddit. All right, not enough chart data yet to get all the indicators, but we're gonna eyeball it. In eyeballing it, for the most part, it all looks really bullish. Right, the trend is bullish, the structure is bullish. That momentum label being red probably just means you're looking for a momentum turn. Oh yeah, look at that bad boy. I'd watch the 4 hour because I think that'd be the key. The trend wants to go higher. The structure wants to go higher. But ever since mid December, you haven't gotten that momentum turn. Right. So this is a Ferrari in the driveway, but we don't have any gas in the tank. So we can look at it, we can admire it, but until they put some gas in the tank, we're not doing launch control going 0 to 60. Right? And they tried back here. They're trying to pull up the MACD, trying to pull it up, right? And you get a little push. Right? They're trying to get the breakout, never gets the actual cross, and they work it right back down. So whether it be today or any day this week, for a push potentially into 190, 200, that I think will be the big key. Can momentum support the good trend and the good structure? Right, and when they're doing that, they're doing really, really good things here, as they tend to. Hey, what's up, Scoop? Yeah, thoughts on GME? I really like the daily squeeze. I have to. I have to like the 2 day squeeze a lot. A plus, perfect score of 15. The only thing lacking is just something to give it a little oomph. 2 day squeeze, daily squeeze. They look like a ticking time bomb. They want to break out. They want to blow up higher. But if you look at a 4 hour chart down to a 5 minute up here on the labels, everything from the ground up is just way too neutral. Too neutral to kick off a big push, and also too neutral, I think, to take out a pretty important level here. No 4 hour buy signal, no 2 hour, no hourly, no 30, 15, 5. Now, if we think of a recent daily squeeze that made a nice push, OKLO could be a good one. A lot like GameStop, it had a daily squeeze. It was near that 21. Right? All the pretty colors, all the bells and whistles. But unlike a GameStop, back on Friday, you're getting that big push off the buy zone. Right. Now, if we go look at the hourly chart on OKLO, that ended up getting a buy signal. If you look at the 30-minute for OKLO, that got some buy signals. The 15-minute, that got buy signals. You had them on the 5-minute. So in the context of all that energy getting built up on the daily squeeze, 5-minute chart gears up for a push, 15-minute, 30-minute, and that can all kind of get that party going for you. So for GameStop, that's the key. We'll look at the hourly. Whoops. Nothing bad about it, nothing bearish about it, but just very neutral. Where when we had Bitcoin a couple of weeks ago, we sat through some of the same action. We finally got paid. We finally got our push when the hourly chart got the perfect score of 15. In a good looking daily chart, the hourly chart says, all right, let's go for it. I've got the trend, I've got the structure, momentum. I'm ready for a push. Right? And they push it, they pop it, and then we're taking that paycheck. From that one time frame perspective, we don't have that same alignment right now. Bull trend, neutral structure, bear momentum. So if they can improve that, we're going 14 out of 15, 15 out of 15. Green, green, green. Then they got the push. Then they can take that daily squeeze, try to get the glory of the breakout. And yeah, Joe, good question. I would trade S&P futures, Bitcoin futures. Anytime I'm taking a futures trade for the most part, I'm doing it for the same reasons and in the same fashion that I would buy, Apple over on the weekly chart. Meaning, what do I like about TSM? I like the fact that the 3 day squeeze Just keeping it really simple. I like the fact that the 3-day squeeze has that white arrow down there. That means I have a squeeze and a perfect score of 15. So I can take my whole checklist and I'm checking off every box. If I'm looking for a trade on the futures, right now, Bitcoin, for example, why do I like the 2-day chart for Bitcoin? Futures coming in a good deal here, a little flush. But why do I like the 2-day squeeze for Bitcoin? I've got the white arrow. So same reasons I like the 3-day squeeze for TSM. Then I would go trade them in the same fashion. I want to fight for an entry as close to that 21 EMA as possible. And then I want to take that multi-time frame point of view. If I have a good-looking 2-day squeeze, do I have a daily buy signal to support it, a 4-hour, 2-hour, etc.? If I'm looking for, we go look at the 30-minute squeeze for the futures this morning. Well, no 30-minute squeeze is just fired. But if the 30-minute was in a squeeze near that 21 and, perfect score, A+ setup, whether it be futures, whether it be the options market, a weekly chart, or a 5-minute chart, I try to keep it so it's pretty much just the same song and dance. I'll try to scalp a 3-minute chart on the NQ in the same fashion with the same execution, entry, exit, target, as I would do on a 4-hour chart for Google. All right, a little dipperoo here in the futures. NQ back to a 30-minute 21. NVIDIA still around that 148-ish. TSM around that 218-ish. We got Tesla popping into the 420, the lucky 420. All right, not too sure what's got the futures flustered here. But it all looks pretty good on the dip. All right, guys, couple more minutes and I got a jet here. Oh yeah, hustle bustle. So I think the issue with trying to share these, and I'll do it again. The upside and the downside ATR targets. Big 3 targets. Share. All right, so it says a link for this item will be generated after sharing items recently shared on Thinkorswim. Items recently shared on Thinkorswim will be available the following day on Thinkorswim at Schwab. What the hell does that mean? I think what that means is if I share this link, it won't work until tomorrow. For some reason, I can't explain. So I would take the link and save it, and then, same time tomorrow morning, see if you have any different luck there. But there you are, my friend. In MEM, I didn't have a call credit spread for TSM. Thankfully, I had a call debit spread. So we bought the 210 call and we sold the 220 call. Bullish on the TSM. Hey, good morning, Charles. Yeah, it just could be a little mid-morning reset. Hey, all I'm looking for is TSM around 218 at the open. Then they can do what they want to do with it. Hey, Zane, do I use volume spread analysis for entries? Good question. I don't personally. And as far as whether or not anybody on the team here at Simpler does, I'm not too sure of that either. But if you'd like, I could write that down and I could ask around the team and then get back to you. If you want to circle back with me on that on Wednesday morning. Good question. I'll try to find out for you. All right, we got some guy in here trying to pump his gold telegram. Yeah, I will definitely check that out immediately. Yella Nelly, good morning. Can I pull up CRNC? Oh, damn. Nice move. from $8 into $20 and looking like we're going into 23. It wouldn't be the kind of thing that I would chase, unless I had bought it back here, and now I can keep on playing for higher, while playing with profit. No, that's beast mode though. Yeah, next time I buy shares, I'm looking for an 8 to 23 in a couple of days. That's solid. Hey, what's up, Josh? Yeah, been there, done that. Believe me. I was thinking about picking up a little Nvidia back on Friday, but I did not. I did not. Good morning, Hombre Gold. Let's look at the gold futures, GC. So one little observation: when they're trending higher and they're doing all that good work back here, all right, one little structure and trend component. 21 EMA is above the 50, and they're both trending higher. So when you have that structure with your 21 and the 50, they tend to support the idea of buying a pullback. We're pulling back into good trending, good structure. So when you get that shift, right, 21 under the 50 trending lower, you're going to get these bounces. You're going to get these short-lived rallies. Bigger picture, the key is really whether or not they can fix that structure problem. All right, we're popping. 21 EMA never back above the 50. We pull back, we're popping. 21 EMA, right? The white moving average never back above the 50. The blue moving average. All right, and they flush it again, and then they're popping it again last week. Right? 21 EMA is still below the 50. So in the short term, we can read between the lines more. Right? 5-minute time frame, 15, 30, hourly. But bigger picture, if I wanted to come in here and call for a sustainable move higher, that's one little piece of the structure equation I'd like to see them fix. And granted, 21 EMA back above the 50. None of that guarantees you getting a nice move, but it's a good rule of thumb. From time frame to time frame, you don't tend to get one unless you've got that one little characteristic there. Okay, and then a final question here. So on the big three sheet, CWPW, that comes from a company called Spot Gamma, who I've really become a pretty big fan of. In CWPW, that's call wall and put wall. So think of those like big magnets. For example, if TSM has a call wall around 220, what that means for me is on this push out of this 3-day squeeze, right, 220 could have a magnetic nature to it, right? Could pull price from that squeeze from $200 into that 220-ish call wall. Right? Can make for a good target, can also make for a good spot to take a few chips off the table. When we get there, it can also be a total brick wall. So what I've found in a lot of cases is in the short term, not always, but a lot of times, that's a big part of the easy push. One mistake I made, and we eventually pulled a little profit out of the trade. But one mistake I made a couple of months ago, Meta had a call wall at 600. And you can see the magnetic nature. You can also see the brick wall nature. Right into 600, right back down, back to it, right back down, back to it, right back down. So here I come buying it at the high on that candle. $1 shy of the brick wall at $600. And then they hammer it. I'm sitting through a pullback, and they eventually get it above the call wall. Kicks off a pretty quick $30, $35 move. So we eventually got paid, but I probably could have saved myself a lot of headaches, waiting for the official breakout first. So that is a little bit on the call wall and the put walls. But all right, folks, I'm gonna let you go here. Got to go jump into my room and take those folks to the open. Yeah, we'll cash out in TSM, and then we'll talk about OKLO, and keep on keeping on from there. But as always, everyone, I appreciate your time this morning. Hope y'all find it helpful. I'll be back with the same time, same channel on Wednesday, and we'll pick up where we left off. Good luck, and I'll talk to you soon. Adios.